So this is Euro-dollar analysis for Monday the 2nd of October. Now, let's go out to the higher time frames first. And let's rescale. So what happened last month? This is the first day of the new trading month. And we've had that extended run to the upside. Last month, the month of September, we finished bearish. We opened at 1909 and closed at 1812. Now, we do appear to be going into a bit of a pullback. If there is a continuation to the downside, I expect to see smaller candles, possibly pulling all the way back down to 116.12 before a consolidation and a move to the upside, possibly get into this moving average, which currently the 200 period moving average currently sits up at 124. Now if I go down to the weekly, so I get my most important pivot on, and let's see where that is. So this week actually opened at, let's just get this correctly, this week opened at 1788. So I'm going to have to mark down to the charts. 1788. Go down to the hourly. And let's just get this down to 1788. Well, it's going to be this candle here, isn't it? And let's just get this on there. 1788. So that's where this week opened. Now if we do trade below it, I am prioritizing signals to the short side. If we do trade above it, I am cautiously bullish. Now let's go back out to the weekly time frame before I come down to the execution time frame of the hourly. On the weekly time frame, as you can see, we've not made new highs, and we are pulling back to the 200 period moving average. We actually hit the 200 period moving average last week and pulled back off it to the upside to close higher than we were down at 1720, where the 200 period moving average was on the weekly time frame. Now I don't really look at the daily charts much. As you can see, we're in a bit of a consolidative range. Pulling back somewhat, and if I go down to execution time frame, you can see as forecast in a couple of my sessions last week, we've come up to the 1830 after holding the 200 period moving average on the weekly time frame down at 1720. We beat the 1770 level, consolidated above it, and then broke to the upside and pulled back from 1830. Now, what's happened this week so far? Well, we've opened down, so we gapped down from where we closed last week. We've come back up, filled the gap, so it might be a similar situation to happened over here during the German election, and this was around the 25th of the, so around the 22nd. No, 24th, 25th last week. Now, it might be something similar where we've come back up, kind of filled the gap and reversed downwards. And that appears to be the case. We've had two candles up, and this fourth candle is going to the downside. Now, to the downside, I'm looking at the 1720 level again. Below that, further continuation to the downside. We're looking at 1612 being the next level below that, and we're looking at 150 may be a significant number. Hold on, let's just get that back. 150 might be a significant number, but it's marked on, but 114.27. So 1612 will be an area of interest to the downside, as well as 1720. So my overall view on euro dollar now, in light of the previous month being bearish, below 1788, I'm going to be pretty bearish on euro dollar. even though it is counter to the current trend on the monthly time frame, we do appear to be heading into a bit of a pullback. So below the level I identified, I am bearish. Now if we do come back down to 1770 and bounce again, we could retest 1830 and then possibly this 200 period moving average there. So before I go, LCS, like, comment, subscribe. Thanks for watching.